Hi, everyone. This is Matthew Cruz. So I'm going to be sharing with you the April supply demand report that came out this morning at 11 a.m. Futures trading does involve risk. I'll let you read through that quickly. So no changes really, or no big changes to the corn. They left the ending stocks unchanged at this 1.342 billion bushels. They made some minor adjustments that we'll talk about in a little bit. The trade was expecting them to make some minor adjustments lower. It came in at 1.316 billion bushels. That did not happen. And so I think that's why we're probably going to see corn down a little bit today. We're in new crop, we're down 5.25 right now. In soybeans, similar situation. They did not make hardly any changes in the soybeans. They left that all unchanged at 210 million bushels, same as previous month. They also, not good news in the wheat. They increased stocks in the wheat, came in at 598 million bushels, a little bit higher than what they were expecting at 576. So about 30 million more than where we were at last month in the wheat. And so I think you're going to see wheat down, and that's going to continue to drag corn probably lower. In the case of the soybeans, or in South America, I think that's one of the big things that the trade was looking for. They were expecting some more cuts to the crop in Argentina due to the drought, the ongoing drought there, and they did make good on that, which I think helped propped up the soybean markets. That's why we're positive at the moment in the soybean market. So Argentina soybeans were down. They made 5 million metric ton cut from last month at 33 down to 27 million metric tons. They did increase the Brazilian crop by 1 million metric tons, which I think surprised the trade a little bit. They weren't expecting that, but nevertheless, it was not enough. The drought in Argentina was too much, and so between Brazil and Argentina, we're still lost 4 million metric tons of soybeans, and it's possible you could still see Argentina shed another 1 to 3 million metric tons yet in that soybean crop. So it's pretty rough there. Somewhat similar situation in the corn. Brazil kept their corn numbers the same. The USDA kept the corn numbers the same for Brazil's production. They're not ready to make any changes there. They did make some cuts in Argentina from 40 down to 37. So we lost 3 million metric tons there in Argentina. And again, it's possible to see another couple million metric tons less in the coming month or so. Looking at global ending stocks, the trade was pretty close to what the average, excuse me, I should say the average estimate was pretty close to what the USDA came in at. They're at 295, came in 295.4. Soybeans, global ending stocks came in higher than what the average trade was looking at, 100.3 versus 98.7. So not much change from last month, but the trade was expecting it to move a little bit lower. In the wheat, came in at 265.1 compared to 266.9. So globally, the ending stocks had some modest good news in the wheat, but fairly negative in the soybeans. So we're going to break down this is the corn balance sheet for April and how they came out with those numbers. So they did reduce imports by 10 million bushels. However, that was offset with a drop in industrial use in corn usage. You can see here that reduced that to by 10 million bushels. And so that's why it offset that decrease in imports. And that's why we leave our ending stocks number unchanged at 1.342 billion bushels. Here at soybeans, it's pretty easy. They didn't make a single change in soybeans, and so that's why we maintain at this 210 million bushel level. And so I think the soybean ending stocks continue to remain tight, even with a healthy production this season. I don't think they could add a little bit to ending stocks, but um, it's not going to change the overall scenario right now of, I think, strong prices in soybeans, which contrasts, I think, heavily with what's going on in the corn market. Looking at wheat, they did increase imports by 5 million bushels, and then also increased feed usage by 25 million bushels. And so we add those together. That's why we add 30 million bushels to our ending stocks here. Takes us from 568 to 595. This is new crop corn chart. You can see here that we're just continue to drift lower. We did have a good day yesterday, very good day that we bounced off that low of 550 and moved back above Friday's high. But with the news today, we're probably going to drift lower again. But hopefully we can, we really need to maintain above this 550 level. That's where we've kind of established our near-term support. And so time will tell what happens there. But the long-term trend is very negative and not looking very good for corn. And I think, of course, the trade is looking at focus very heavily on the weather right now and the spring planting. And if things continue to warm up the way they are, and this crops gets put in a timely manner, you're going to see the market continue to erode and probably move lower. Soybeans, still holding on, not as bad as the corn, but we'd still like to see a move here in new crop soybeans back above this 1340 level if we can maintain momentum higher. We've kind of sold off. We spiked up higher with when the report came out. We kind of sold off now, so we're up. Actually, we're flat at the moment here in new crop. So, but we were up 10 at one point, and so we've sold off pretty hard from that. But we need to maintain above this roughly 308 level for support in the new crop soybeans. Otherwise, we'll probably, if we bust below that, we're probably gonna could potentially retest those lows. New crop wheat looks very similar to new crop corn. We just can't get anything going. Just continue to slide lower. We stole off pretty hard here late March, and you can see we've had a lot of days in the red, and the market is looking like it wants to go back and kind of retest this $7 support level in new crop wheat. So if you're a bull, you're going to point out that the drought in Argentina and southern Brazil should help prop up the market. And I think it did a little bit today, maybe not as much as we'd like. There are parts of Brazil and the state of Paraná where the safrinha corn, the second crop corn, was planted late. And I think that'll weigh on the market. However, on the other hand, the crop is looking pretty good in places like Mato Grosso, which is the largest state for second crop corn production. You can point out that there's still a lot of heavy snowpack in North Dakota and Minnesota. It is starting to warm up there this week, of course, and so you'll see a lot of that dissipate, but it could take a while for that to dry out. You're going to talk about the ongoing war in Ukraine. Is going to diminish the threatened trendline yields there, and we're also still have drought lingering in parts of the Western Corn Belt from last year. So if you're a bear, you're going to point out that the grain quarter does remain open, and I think is set to kind of renew around May 19th. According to Russia, it kind of depends on who you ask, I suppose, if you ask Russia or Ukraine. And interest rates are moving higher, obviously, and so there's a risk that's going to begin to work against the economy and potentially reduce demand. China continues to buy quite a bit of grain, just not always from the United States. They're buying more from Brazil than they are here, and I think you can also point to, we're going to plant, according to the USDA, plant 92 million acres of corn, and if we have depending on how well the planting season goes, that number could increase as fertilizer costs continue to drop, and so we'll have to keep an eye on that. But if it takes a lot longer for those acres in North Dakota, Minnesota, northern Minnesota to kind of dry out, and things start to get kind of late, it could be that they'll shift to maybe some other crops, or just take prevent plant, and then those corn acres could potentially drop, and that would be bullish for the market. So I want to thank you for watching. You can subscribe to our report at comstock.com. If you have any questions, give us a call at 712-227-1110.